I want to go to the trading floor in Chicago and find out what the pulse of the trade is right there where it's all happening. We have Scott Gecas standing by. He's with Walsh Trading. Hey, Scott, how are you?
Good. How are you?
Doing fine. Thank you for joining us here today. The market seems to be a little bit indecisive. I noticed in the last few minutes it seems to be kind of giving and taking a little bit, either side of unchanged here.
Yeah, volume's really light right now too. So you're seeing price action on both sides, pretty much across the board. You're looking at just a little slightly higher premium to the call side as far as soybeans and corn goes. For wheat, it's more to the put side. So we're going to see how this has really been playing out. But I mean, volume just pretty much across the board is very light. Waiting for different news to break one way or the other just to get some type of decisive direction.
Okay, let's look at our corn futures, and right now behind you on the trading floor, here's what we have. On the May, we are up just a penny at 362.5. Had been as high as 364 3/4, so we came off that now by a couple of pennies. And we have December new crop corn trading at 390.5, which would be up 1 penny. If you look at our soybean trade, now you have the May contract down 3/4 at 8.99 1/4, while November new crop down 1/4 cent at 9.32.5. And if you go to the wheat market, we had some big gains early on in Chicago, but they're kind of fading. May Chicago wheat now up 3 at 4.67. That's almost, it's a little over 4 cents, I guess, over our earlier high. We have the July contract at 4.71. That's up 2.5. In Kansas City, we had some fairly strong gains there, and they're all gone. May now unchanged at 4.33 1/4. July down 3/4 at 4.40. Don't want to leave out the spring wheat in Minneapolis. And here you have the May contract in that Minneapolis wheat now showing a trade 5.5 lower at 5.36 1/4. July down 5 1/4 at 5.42.5. They're really pressuring this spring wheat trade today, Scott.
Yeah, like I said, and that's one of the reasons why you're seeing that put skew be a little bit more elevated than the calls. You know, with the wheat market in general, it's a little bit weaker, has a much softer tone. Coming in this morning, the weaker dollar was a little bit supportive, but as you can see, we're starting to pull back a little bit now.
I'm glad you brought that up. Let's take a look at the dollar if we could and see just how the futures are holding up. On the dollar index, right now you have your June futures down 210 points, and they are quoted at 96.710. Crude oil trade as well. We'd like to check on that, and it is down 9 cents now at 62.49 per barrel on the May contract. We'll come back and take a look at our livestock trade with Scott Gecas when we come back. We are back talking with Scott Gecas, and he is with Walsh Trading in Chicago at the edge of the trading floor, talking with us live and direct right now. As we turn our attention now to the livestock trade, we noticed where in the grain sector things were kind of drifting lower off of their highs earlier this morning. What's happening in the livestock trade?
With the cattle market in particular, there's really nothing going on. The volume is really anemic. There's hardly any option volume flow going either way. So right now, as far as what we're looking at in the cattle market, we're looking at the cash trade. That's going to drive the price. But more or less, we're looking at the technical side, and that 125 level is going to be our first key support level.
So we see April live cattle at 126.08. That would be down 20 cents from what I hear out in the country, Scott. We're hearing cash trade at something like 124. I'm even hearing some rumors there may be some couple of bucks under that even. So how much is that going to weigh here on the nearby futures on the live cattle for the next day or two?
Well, I mean, with the very anemic volume, I mean, if you get one big block of, size that comes in, it's going to push it one way or the other. It doesn't really matter which way you're going to go. So that's the risk that people that are trading futures have. When you start getting these low volume days, any type of larger volume can push it one way or the other.
So typically this week we have had bigger moves in the feeders. Let's take a look at what they're doing right now. And on the feeder cattle market, we have the April down 45 at 144.40. We have the May contract 40 lower at 147.40. And the deferreds get weaker yet until you go out to October, and it's down $1. But on the lean hog trade, lean hogs, we had, what was it, the second and third contract months, I believe May and June. Yesterday, we're actually limit up on the close. So we're dealing with the expanded limits today. And we have the May contract up $1.75 now at 85.75. And it's back up there within a dime or so, 15 cents of its high of the day again. June now up $1.80 at 93.30. Violent whipsaw action once again in the hog market today. Now the April is a little bit lower. But, of course, we're in April, and this is not something where you have to worry about deliveries, right? This is all cash settled on the hogs.
Correct. Yeah, with the lean hog market in particular, I mean, it's a soap opera right now. You have the border control, we have the closing of the borders, the Chinese trade war talks, and, the African swine fever. I mean, everything right now is just swirling around. You're having rumors all over the place. The implied volatility on the May contract is about 14 points above the 20-day historical volatility. That it tells me that we're expecting something big to happen one way or the other. Could be that China comes in and be an aggressive buyer. With the open interest in the $10 calls being around 467, those are completely long shots. But either way, that tells us that the option skew is very skewed to the call side, to the upside. And with that option flow, we expect to move higher in the next, few days or so.
Boy, interesting stuff, and there's a lot of math involved in all of that, a lot of calculations being done, and thanks for staying on top of that. I appreciate that very much, and for helping us navigate through the options market. Scott Gecas of Walsh Trading Incorporated, and they are based right there in Chicago. So, boy, some smart people having to do all that.